Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Amazon cuts 16,000 corporate jobs to remove layers of bureaucracy and, quote, increase ownership.
Plus, ASML also announcing job cuts to boost efficiency and posting strong fourth quarter orders.
And sources tell Bloomberg that SoftBank is in talks to invest as much as $30 billion more into OpenAI.
Let's check in on these markets, though, because there's been some interesting whipsawing, ASML among them, but we go more macro right now. At one point, we saw the S&P 500 above that $7,000 level. We have never seen that before. And that is as we see the momentum in AI continuing, but we have a crucial Fed meeting. What is going to be put to Jay Powell later today about independence of the Federal Reserve? We're not thinking that there will be any move in terms of rates, but still there's nervousness around Iran as well, Ed. There's a lot to be focusing in on, but for now, the Nasdaq 100 holds on to its gains of 0.4%. What are you looking at?
The breaking news story of the morning, Amazon is cutting 16,000 more corporate roles, eliminate middle management, streamline. It confirms a lot of what Bloomberg had already reported. The stock kind of bouncing around in the session, now softer by 0.7%. We're going to get to that later in the program and go deep on what's happening in Amazon and tech more broadly. Then there's ASML. At one point in the session, up more than 7% and pushing to a fresh record high. Great blockbuster bookings, bookending the 13th consecutive year of growth, and also doing its own job cuts. I guess, fix the roof while the sun is shining kind of analogy, Caro. But now the stock is down softer, 2.5%. Something might have been happening on the call.
Yeah, we've got to dig into it because, as you mentioned, 1,700 jobs are to go, and the Dutch maker of the semiconductor equipment that is sort of world used says it plans to cut 1,700 roles, around 4% of the workforce. It's an effort to streamline the organization, the CEO has said. Look, this is as the company reported earnings that you mentioned showing record fourth quarter bookings, fueled, of course, by AI demand. But ASML CEO Christophe Fouquet did speak with Bloomberg on the phone earlier. Take a listen to what he had to say.
The last 3 months have brought a lot of clarity. And I think what you see basically is that the semi-industry, our customers, start to believe that this AI demand is sustainable. And therefore, they have moved into building capacity, and they are moving very aggressively. And I think this has been very nicely translated indeed into a record booking number. So that's, of course, very good news for the midterm.
Why are the shares down then? Let's talk about the results. When Pierre Ferragu, he's head of global tech infrastructure and New Street Research. Why did we sell the rally, the record high in the shares earlier today?
Hey, Caroline. Yes, that's a great question. So I think ASML basically confirmed what everybody suspected, that 2026 is going to be a great year. Now you have to take a step back and think, okay, what does that mean, a great year? They guided revenue growth between 4 and 19%, which in absolute term is very strong growth. As you mentioned, like the bookings were like never seen. We've never seen that level of orders at ASML, like exceeding 13 billion in a single quarter. Now, when you take a step back, think about what is the downstream of ASML? Who are the clients? It's a Micron, it's a Hynix, it's a Samsung, it's a TSMC. And these players are actually growing much, much faster than that. They're growing, like if you take, for instance, TSMC is probably going to grow like between 30 and 35% this year. So we already see that semi-cap equipment starts lagging a bit their clients in terms of growth. And that's a very natural thing because they sell equipment to add capacity. And when you look at the trajectory of growth of AI, we are actually just passing the inflection point. Going forward, growth is going to continue to be very strong, but it is going to slow. And so it's going to translate into slower growth at semi-cap equipment manufacturers. And I really think this is the way the street is digesting the news today and overnight. Initially, the stock was up, and now the street is realizing, okay, but if 2026 is a peak spending year, maybe it's time to actually take profits on ASML as a stock.
So you think This is peak. I mean, that's not what one would hear from Jensen Huang, who thinks we still got trillions to go. We are still in this mode of trying to question whether we're in an AI bubble or not. Do you think that we got any clarity on that from ASML after we, of course, got TSMC, after SK Hynix showed such strength in memory?
Yeah, so we're definitely not at peak on AI. And you look at the TSMC guide to 2029, growth between 55 and 60%. So we are still in a very high growth environment in AI. The peak I refer to, Caroline, is a peak in actually capacity increase. Because if in 2027 you still grow very fast, but a bit slower than 2026, you will not need more equipment that you needed in 2026. So this is this idea that semi-cap players are driven by incremental capacity, not by growth directly. It's a first-order derivative of the growth of their clients. And that's the reason why the market is right to be a bit nervous, specifically on semi-cap. Now, when it comes to their clients, like the growth outlook for 2026 is amazing. It's already very strong for 2027. And it looks really, really good for 2028 and 2029. So we are still in a very, very, very strong growth environment in AI.
Pierre, if the stock's down and 2026 is the peak, the market doesn't believe Mr. Fouquet. He thinks it's about sustainability. Listen to this real quick.
I think we have all been surprised by the magnitude of AI, and we all saw it coming a bit. But at the same time, we see those investment coming out, and it's pretty big. And I think that all of us are continuing to watch, basically, for the sustainability of those investments. I think sustainability is a key word. I think the question is always, is this going to last? I think that more and more of our customers are responding positively to that question.
Is this going to last? And he's saying that the signals from his customers are that it is going to last. And you're saying the market isn't showing us that.
Well, the market is being careful about it. Because this is going to last for the CEO of ASML might mean we still have very good level of spending in 2027. But if 2027 is as good as 2026, how is the stock going to work on that? It's probably not going to work well.
I have a question for you. What is the leading indicator in the world of tech, right? I can give you a chart right now. It shows you expected capital expenditures for the hyperscalers and other associated names like Meta and Oracle, right? Is that the leading indicator? Or Bloomberg's Ian King is going to come on next and tell us that Texas Instruments is a leading indicator for the health of the economy? Or ASML and EUV demand is a leading indicator? Which data set is most critically important to you right now, Pierre?
So what's most critically important, Ed, is to connect these data sets rightfully. I love the chart you just showed. This is like CapEx. And you see that we expect CapEx to grow a lot this year, a growth next year. And as we are not too sure, we don't model much beyond that. This is a leading indicator. Now, what is going to drive the business of ASML is how much incremental CapEx you add every year. And what you see very clearly is that this incremental CapEx is now plateauing and coming down. And that's the reason why in semi-cap equipment, you have to be careful and expect like a significant slowdown in revenue growth. For the rest of the industry, CapEx growth is a very, very good indicator. And then Texas Instruments is actually a very interesting indicator. That is the most important indicator today outside of AI. Because it's quite important to understand what is the global economy doing outside of AI. And we've been into like a very, very painful, lengthy down cycle in automotives, in industrials, and what TSMC said, it's confirmed signals that we've had already for a few weeks that we are at the bottom and things are improving.
Just trying to answer the question, is this going to last? Pierre Ferragu from New Street Research, thank you very much. I alluded to it just then. Shares of Texas Instruments soaring after the company gave a surprisingly robust forecast for the first quarter, signaling that customers have worked through inventory and are returning for chips, analog chips. Multiple analysts are raising price targets, calling the outlook encouraging. Bloomberg's Ian King is here. Analog chips, simple translation of a touch of a button into a signal, but we always write in our story, in our summary of earnings, this is like the bellwether, the crystal ball for the economy. economy. What do we learn through their earnings print?
Yeah, I mean, they've got tens of thousands of products, tens of thousands of customers, so they are literally everywhere. Everything that's got a on and off switch, that's where they are. What they said was, again, you were very careful, and they're incrementally better. They had been talking about a recovery being kind of off pace, not as kind of robust as we would normally get. Now they're saying, actually, orders are improving and are continuing to improve. The signs are now better.
How much are they able to harness any of the AI vibes rather than autos, industrials, the bellwether part?
Yeah, and that's a very good question. The answer is they confirmed the AI vibe is good for them. It's now a significant business, but really it's not the main business. The main business for them remains industrial and automotive, the things that are a broader... I mean, we know that data centers are big, right? And they confirm that. What they told us was that industrial is getting better as well, which is what we want to hear.
We're really focused right now on how global these companies are, like currency impacts, like China, what's going on with China. Is there anything kind of extra that Texas Instruments can tell us about different geographies, other industries, like industrial good? Is there anything that's pretty bad?
Yeah, I mean, they talked about consumer electronics not being fantastic, and that's because consumer electronics actually recovered earlier than their other markets, and now it's kind of slowing down a little bit. Some of the consumer electronics devices, home theater, maybe PCs, a little bit memory dependent. We talked about memory. The price of memory is going up. That's no secret, and that has a knock-on impact.
Ian King, as always, breaking it down. And you mentioned memory. We're going to go there. Check out SK Hynix shares. They have really rocketed on the back of their earnings. And there's this relentless appetite for AI memory, which SK Hynix serves. They're also, in fact, going to be establishing an AI data center solutions firm here in the US, Ed. How much is that to do with South Korea-US relationships going forward and the need to invest in the United States? It's going to be backed by $10 billion of capital to pursue partnerships and investments in the sector. So keep an eye on that stock. And that was its trading in South Korea today.
Okay, coming up, trade tensions rise between the US and South Korea. More on the why next. This is Bloomberg Tech. Taking a look at shares of Amazon, softer 0.7%. The company announcing the cut of 16,000 corporate jobs worldwide, saying it's an effort to remove layers of bureaucracy and to, quote, increase ownership. It also confirms quite a lot of what Bloomberg's been reporting of late. Bloomberg's Spencer Soper, who covers Amazon, joins us now. 16,000 corporate jobs is the latest wave of more than one wave. And the messaging, and in line with your reporting, right, is that this is about efficiency and streamlining, not about AI. What are the details of this particular trim that we're seeing?
Yeah, definitely a delayering. They're kind of targeting the middle, and this is something that goes back to last year when Jassy was talking about, more people who are doing the direct work and fewer people managing the work, in the middle. So there's that in there. It also hit a large, different parts of the organization. So when they had initially laid off 14,000 back in October, departments were given a choice. They said they had to hit some numbers, and they were given a choice: do you want to cut people now or wait until after the holiday season? And so a lot of departments, particularly the retail division, waited until after Christmas to do their cuts. So now we're seeing a total of 30,000, which is the biggest in Amazon's history for the corporate side, and that's compared to, I think, 27,000, which was a few years ago, back in 2021 and 22.
Now, it feels, Spencer, that they've been at length to say this isn't some regular occurrence. I know Beth Galetti, who's really in charge of people experience technology, this isn't going to be some rolling set of cuts that we see every few months, but 30,000 last 3 months is a huge amount.
Yeah, 30,000 is a big amount, but also if you read her statement very carefully, it's really corporate gobbledygook trying to strike that tone between, reassuring employees, but also not making any promises. You know what I mean? So she's saying some might ask if this is going to be a rolling theme, and but she's not really saying, hey, we're not going to cut any more over this period of time. So it's kind of just not non-committal gobbledygook if you really read it carefully.
Yeah, saying, is this the beginning of a new rhythm? That's not our plan. But just as we always have, every team will continue to evaluate the ownership, speed, and capacity to invent for customers. Bloomberg's Spencer Soper, thanks for breaking it down for us. Now, the Trump administration is demanding that South Korea implement its 6-month-old trade deal with the US to prevent tariffs from rising to 25%. Trade tensions between the two countries have been rising, made worse by the US's frustration with Korean digital services regulations. Bloomberg senior tech editor Mike Shepard joins us now to unpack what is a tech-centric story in many ways, because it involves key chip makers over in Korea, for example.
Well, it really does. And we saw actually the flashes of this brewing as long as 10 days ago, Karen. We saw Howard Lutnick threatening those memory makers with tariffs of up to 100% if they didn't step up their investments here in the U.S. And that is one of the issues that we have seen surge more recently with the president's threat of increasing tariffs to 25% from the current agreed upon 15% level. And a lot of that has to do with what is happening with those investments. Remember, under the deal, South Korea had promised to invest as much as $350 billion in the U.S. over the next several years. But that step has been stalled in the South Korean parliament. They are just beset by a lot of issues, including currency woes and capital outflows. And so lawmakers there have really not been able to codify how this investment would go forward. But we heard this morning from U.S. Trade Representative Jamieson Greer that time is up and South Korea needs to start moving. Otherwise, the U.S. will move to the next step, perhaps, and that is implementing a potential tariff increase.
Mike, the other news story at the intersection of tech and what's happening in Washington, D.C. is Intel pledging to match Trump account contributions for its employees. What do we need to know about that?
Well, it's an interesting step, and it's one that other companies, including BlackRock, have already taken, and that they are, and Dell, of course, Michael Dell, the founder of Dell Computing, is one of the pioneers behind this Trump accounts project and has made some big pledges that we've talked about on this program before. But Intel is getting in line with that, and of course, the stakes for Intel are quite different. And when I say stakes, it's quite literal. The U.S. government owns currently 5.5% of the company and is on course to own as much as 10% of the chip maker. And it's also interesting, Ed, that in December, the company hired Robin Colwell from the White House to serve as its next government head of government affairs here in Washington. So Intel is, in a way, really aligning with this initiative, the Trump accounts, which are designed to encourage saving and investment by parents for young children over the next several years to try to get people not only invested in the stock market, but saving over the long haul. And in this way, Intel is trying to get on the right side of the story with the administration in another one of the president's priorities.
Bloomberg's Mike Shepard, thank you very much. Kara.
It's time now for Talking Tech, Ed. First up, Elon Musk has suggested the timing of SpaceX's possible blockbuster IPO could come in mid-June. It's according to a report in the Financial Times. The owner of the rocket maker, of course, is reported to be targeting the IPO for when Jupiter and Venus will appear very close together in the sky. Musk's 55th birthday is also in June. Plus, Snap has created a subsidiary dedicated to augmented reality glasses, Specs. Now, the unit is intended to give the smart eyewear team more independence, but allow it to raise some money. A spokesperson confirmed Snap will launch the AR glasses regardless of external investment. And Apple CEO Tim Cook has joined other tech leaders weighing in on the killing of Alex Preti by federal agents in Minnesota. In an internal memo, Cook called for de-escalation, and he said he had spoken to President Trump about the situation. SoftBank is in talks to invest as much as $30 billion more into OpenAI. Now, that's according to sources. The Japanese firm is already one of OpenAI's biggest backers, with an 11% stake in the ChatGPT maker. And with more is Bloomberg's AI and data center czar, Lin Duan. And so, 30 billion really makes Massa all in. I mean, we know he takes big bets.
Yeah, and I think we had one of the analysts out in Asia saying he is literally betting the house on OpenAI and other AI stakes. Now, that being said, it's probably worth pointing out that it's as much as $30 billion as opposed to $30 billion itself. So we'll see exactly where he lands there. But I mean, let's face it, like SoftBank has already invested tens of billions of dollars in OpenAI. So what's another $30 billion billion at this point, right?
Lynn, there are lots of people in my world asking equally if OpenAI is good for it in all their capital commitments for infrastructure and whether SoftBank has up to $30 billion. But the main thrust of it is that this is part of a round that we know is happening, right? OpenAI wants to raise money. What do we know about its target raise overall and the valuation it wants to hit, irrespective of how much SoftBank contributes to that?
That's exactly right. And we've been reporting on this funding round that OpenAI has been orchestrating over the past several months for a while now. Obviously, SoftBank isn't the only name that is intended to invest in this round. We very recently broke the news that OpenAI has been in conversations with very big name investors in the Middle East. And so it's possible that we see some sovereign wealth money wind up in this round. Now, in terms of like what they're targeting valuation wise, very difficult to say. It's even like difficult to say exactly how much they may end up raising in the end. The ranges that you've seen out there from us, from others in the media, are kind of all over the place. It's like anywhere from $750 billion to $850 billion, depending on where investors in OpenAI decide to land in the end. So it's very much an active round, and we continue to try to keep tabs of exactly where it lands.
What's interesting is how SoftBank has been very focused on the AI play, but also selling down in NVIDIA to be able to loosen up some cash. They made a purchase of Ampere, for example, in the chips area. Are they deemed a winner in the AI space right now?
Well, I think it's probably two different questions that you're looking to unpack there. One is, what does SoftBank selling down its stake in NVIDIA really mean? And I think that for a moment, people were making the mistake of interpreting that as, ooh, SoftBank sees that it's getting like way over its skis and it's not really, all in on AI, when in fact, what it was really doing is trying to raise enough money to make even more bets on AI. Right. Your other question, though, was like, is SoftBank a winner in AI? I mean, is anybody a winner in AI? I think that the concerns over an AI bubble are still relevant. We saw ASML, though, report some strong bookings. So.
Welcome back to Bloomberg Tech. Let's check in on these markets, which have been flip-flopping as we build anticipation of the Fed decision, and indeed, many feeling we're not going to get a rate change, but what will Jay Powell say at the press conference? We've also got building geopolitical anxiety, whether it's about Iran, whether we've got still tensions with South Korea in terms of trade. Nevertheless, at one point the S&P 500 goes above 7,000, and the NASDAQ 100 holds on to its gains. Earnings are coming thick and fast. This is where we see the fundamental picture of this tech rally that we're so used to. Seagate, best performer in terms of actual percentage move when you're looking at the NASDAQ 100, 20%. This is again winning formula on memory. Analysts calling the numbers that Kate put out last night terrific. Texas Instruments also came out with numbers. This is like the bellwether when you're thinking about industrials and thinking about autos, and we've hit a bottom where we're coming back out of it. We're up almost 8% on that name. ASML actually turns red. It had blowout orders, but seemingly people questioning perhaps where they can keep on building momentum, selling chip equipment to those chip makers such as TSMC, Intel here in the United States. Intel, as I say, up 10%. Keep an eye on how the mood music has changed around AI or whether there's a bubble or not. Ed, it's all about these earnings right now.
It is, and big tech earnings are well and truly upon us, and that includes ServiceNow. Bloomberg Intelligence says investors will want to hear about the pending acquisition of cybersecurity startup Armis, along with new AI sales and a lot more. Bloomberg's Brody Ford, who covers the software space, is here with us. Generally, right now, the IT spending environment isn't great. Yeah. What is the kind of read-through and expectation from the street on how ServiceNow will talk about that, right, and how it will show up in their own numbers?
Application software has just had a really tough stretch the last year or so, right? I mean, we've seen all of these big vendors, whether it be Salesforce or ServiceNow, talk up their new AI tools, but it just seems that we can't quite see it in the numbers that there's a real revenue uplift. And with ServiceNow, add on top that they've made 2 big deals in the last year or so, I just see a lot more investor anxiety about them than I had at any point in recent years.
I mean, you just have to look back to how their shares have deeply underperformed. Last year, where they were off by basically almost 30%. When you flip into what we might hear from IBM, it has actually outperformed software names, but their consultancy side of the business is maybe the one that you get the AI part of the equation coming in.
Exactly. IBM is facing this moment where the discretionary spending is being taken out of those traditional consulting projects. But it doesn't seem to matter too much for them because a lot of their infrastructure software is doing quite well and people are still buying a ton of mainframes. Who knew? So IBM has actually faced a pretty, positive environment for a name that in the past was associated with a kind of stodgy, boring, slow growth company,
Don't even get them started on quantum, Brody. We got a lot to digest after the bell. Thanks to you. We appreciate it, Brody Ford. Now, another stock we're watching is Microsoft. Investors are paying close attention to its cloud computing service, Azure, and the impact of AI, generative AI. Alex Zukin, his Wolf Research analyst, expects the platform's growth to exceed guidance at 39%, writing, "We believe that OpenAI training revenue will begin contributing more materially to Azure in the second fiscal quarter and beyond, which could provide incremental upside to our preview." Alex joins us now. The question is, do they have the capacity to serve the relentless demand from a player such as OpenAI, Alex?
Yeah, Carol, I mean, that's the big question. And look, we're excited. We think this is the bellwether that's going to help usher AI into the enterprise era. The move from co-pilot to co-worker that never sleeps, never eats, never complains, just works on complicated problems all the time with the same tool chain that you're used to as a human. We think Microsoft is very well positioned as a platform to deliver on all parts of that stack and journey, the most important metric being Azure. Yeah. The capacity constraint issues we think do start to get resolved as they bring the Fairwater data centers online. We see both the Wisconsin and Atlanta data center starting to ramp and contribute. We think that unlocks about 1 gigawatt of capacity over the course of the next year, which we estimate is about $20 billion of incremental Azure unlock. We think that they also are contracting and expanding their capacity with third parties like the NeoClouds, Nscale, Nebius, and a few others. That could be up to another gigawatt of capacity, or another potential 20 billion. So we think that you start to see those resolutions come through over the course of the next few quarters.
I want to go back to where you started, co-pilot, and then you went co-worker. What's so interesting, we on the show the last few days and really thinking about Anthropic's offering co-work. How much is that potentially a real competitor to Microsoft? Could it upend it in the space?
It to me, and the way we think about it is that we're in phase 0 of adoption in the enterprise. A lot of the tools, the way they're being used right now, we're in the discovery phase of what's possible. We think that Anthropic, OpenAI, really all the model companies have an opportunity to massively expand the value creation that they're delivering in their offerings in the enterprise specifically. And so this is a demonstration, we believe, where different vendors at different times will be able to exhibit share gains with functionality that they launch in their ecosystems to enable value creation. So we view it less as a zero sum and more of as an infinite game that we're just starting to play.
Alex, I find this so interesting that we've started this conversation about top-line growth in Azure, right? Almost the reverse of a conversation we might have had 1 or 2 quarters ago, which would have started with capital expenditures. How much do you need to just get a projection of confidence from Microsoft on their capital expenditure figures to keep this big story alive?
Yeah, so look, last quarter was the big shift quarter in terms of CapEx going from, something where we thought it was going to be 100 billion to 150 billion this year. We think that the CapEx shift has been made. We think now it's a question of stability and, to some extent, maybe aligning the increase from here with some of your kind of core revenue growth assumptions. But look, that could change too. Over the last month, we think inference has, quite frankly, exploded with the amount of tokens being generated for autonomous coding tasks that are now running, writ large when people sleep, as well as some of the possible functionalities exhibited by things like Claudebot and these other kind of orchestration engines. So it's anyone's guess. We don't think CapEx is going down anytime soon. We think kind of stable to up is how we are thinking about it.
When it comes to genuinely autonomous agents, Microsoft's very good. I always say this on the program. It's what I grew up with, selling software that you can otherwise get for free elsewhere. They're not the only game right, when it comes to the coworker. AWS has a very similar story they like to tell. They like to talk up their prowess in observability, right, a really important critical factor when an agent is an autonomous. And they talk up at AWS how well they're doing to help engineers get through backlog. How are you going to discern, Alex, which company's better at that? And therefore which will be adopted in the enterprise?
Well, look, I think all three hyperscalers have a role to play. I think the one element about autonomous agents, particularly ones that have to handle sensitive, oftentimes customer privileged information, is security. And we think one of the key differentiators for Microsoft is their security portfolio, their security stack, their security graph, as well as all of the investments that they've made in other parts of the data platform estate over time. So we think that is a critical piece of the puzzle that will help them gain share of this developing market that we're just kind of starting to discover the use cases around.
Alex Zukin of Wolf Research, great to have you on the show in advance of Microsoft. Now, coming up, Waabi CEO Raquel Ederson joins us to talk about the self-driving startup's latest funding and a push into robo-taxis. That's next. This is Bloomberg Tech.
Self-driving startup Waabi has secured $1 billion in new funding. It includes a $750 million Series C that was led by Khosla Ventures, by G2 Venture Partners, plus $250 million in a milestone-based investment from Uber to launch Waabi-enabled robo-taxis. Joining us now, Raquel Ederson. She is CEO, founder of Waabi. How important is this focus on physical AI in the trucking space, now moving to the robo-taxi? How significant is that for you?
Yes, it's a really exciting moment, I will say, where the physical AI revolution is here, and self-driving is where it's going to scale first. And we have a very advanced system in trucking, and now we are entering robotaxi with a massive partnership with Uber, and it's really the next stage for the company. It's really exciting to be leading the way in physical AI.
What's interesting is we had Gatik on yesterday, also raising funds. They're securing new deals. They're already commercializing. How is your go-to-market looking? It's all about the platform that you offer when it comes to trucking and now robo-taxis. What is it that makes you so distinct?
So what makes us very, very unique is the fact that we have next generation technology, a physical AI platform that for the first time in the industry is going to be able to drive both form factors, robotaxis as well as self-driving trucks. We are very advanced in terms of both the technology as well as commercialization in trucking. And now, entering robotaxi, and we're going to enter robotaxi really, really quickly. So it's very, it's great to see that, this next generation technology enables you to go so much faster, so much more capital efficient, and with a product that really meets the customer demands.
Raquel, congratulations on the round. Really notable. It reads like the money that's coming in from Uber is contingent on you hitting some milestones in robo-taxi, right? Your focus has been autonomous trucking. What are those milestones in robo-taxi that Uber requires you to hit so you can unlock access to that cash?
So not sharing a lot of details yet on the amazing partnership with Uber, but those are simple milestones that we can achieve quickly. And thanks to the technology that we have, already today we have the capabilities to, the core capabilities required for robotaxis with our self-driving trucks. Unlike the rest of the industry, we can drive not only on highways but in generalized surface streets. So that's why we feel very confident that we can enter robotaxi and disrupt that market really, really swiftly.
You're a Canadian company, essentially, and one of the conversations that we were having yesterday with Gatik is in the US, a need for a federal regulatory framework. Are you able to give me a kind of assessment of going to market in Canada versus the United States? Which jurisdiction you think is ahead, right, in accommodating this nascent technology?
Yeah, the U.S. is definitely ahead of the Canadian market in terms of regulatory piece as well as adoption. And Canada has to do, quite a bit to catch up, but there is a lot of excitement on the Canadian ecosystem to make this possible. They really understand that this technology has so many benefits, from safety to all the efficiency that is, and sustainability, extra sustainability that is going to come with the technology. So definitely there is a desire, but the US is way ahead of Canada. So we will, for us, our first market has been over the last couple of years for tracking really the US. Also it's a much larger market, and then we will see about more expansion in the years to come.
What's interesting is that you've been in AI, deeply entrenched in the academic side of it, still a full professor over in the University of Toronto for 25 years. Is talent ever an issue for you? People so know who you are, they must gravitate towards the expertise you brought in physical AI, but it's getting very expensive. Is that almost what some of this funding round is for?
Yeah, it's a great point, Caroline. So there is definitely, a lot of, talent war for AI these days, with obviously the revolution that is happening. But Wabi can attract the best in class without paying premiums. And the reason why is that if you're interested in physical AI, if you're interested in, bringing a product that is, is a once in a lifetime or in a generation sort of opportunity to really change the world as we know it today, and you want to do it with innovative technology that and really pushing the industry to the next level, then Wabi is the place to be. And that's what we have hired the best in class talent team, and we continue to attract the best in class, and also our retention numbers are off the chart. So definitely amazing team, and we continue to double down in terms of hiring.
Raquel, I have another question about Canada, and forgive me, it's just been so much in the news recently, the ecosystem in Canada. You probably saw that Y Combinator cut Canada from its list of countries that it would invest in startups in. What do you make of that? And what is the ecosystem in Canada right now? Like, on the software and hardware side, do you see the talent pool that you need available in your home country?
Yeah, so I'm not going to comment on Y Combinator specifically, but I will say that there is a vibrant tech ecosystem in Canada. As you know, Canada has been at the forefront of really all the innovation, or the majority of the innovation that underpin the AI revolution that we are seeing today, with folks like Jeff Hinton, Nobel Prize, etc. Right? So the talent is there, the ecosystem is there, and from my perspective, Wabi is a proud Canadian company, and there is a few others that are really leading the way, and it's an amazing market. And if you look at our list of investors, we have plenty from the Valley, plenty from Canada as well as Europe, and even Middle East now. So I will say that Canada can really attract capital from across the globe, and it's a miss if you don't invest in Canada.
Thank you. Raquel Edison, CEO and founder of Wabi, closing a $750 million Series C, taking up to $1 billion with support from Uber too.
Wall Street, perhaps feeling some mixed signals on Tesla ahead of its earnings. Price targets for the EV maker, they're rising despite investor concerns over its earnings potential this year. Here with more is Steve Mann of Bloomberg Intelligence. And for Tesla, it's always a question of whether you care about the fundamentals in the quarter just gone, or whether you're betting on AI, Optimus, and the future of robotics.
Yeah, I think if you look at the stock price over the last quarter, there's definitely some push and pull on the stock price. It's been pretty steady where it's at the moment. So there are two camps. One is looking at the business fundamentals. Sales in the fourth quarter was down 15-16%. Not, there's been a lot of pull ahead before the $7,500 U.S. tax credit went away. So earnings are probably not going to be pretty. But on the other camp, investors are really stoked with their Cybercab robotaxi rollout.
Steve, in your January 12th preview, you wrote that 2026 is the pivot year for AI and robotics, right? And that you expect management to talk up those things. But what do you actually need to hear? What things of substance do you want Musk to say on the call that actually will be a driver of confidence in the near term, even if that is this year?
Yeah, I think investors are very anxious about that. Elon Musk has talked about, the vision system, self-driving vision system that they're rolling out. There's a lot of anticipation because, I think the next leg for the company is really scaling that business. So it's about robotaxi. It's about rolling out the Cybercab, the new, steering wheel-less, brake pedal-less vehicle, and the FSD subscription. Investors are very stoked about this, and they're really looking for Elon Musk to tell them that, hey, in the next 3 to 6 months, we are really going to scale it up beyond Austin.
Steve Mann of Bloomberg Intelligence are all bracing for aftermarket today, and Tesla are also bracing for Meta, which reports after the bell. Investors are focused on AI capital expenditure plans for 2026, which analysts say could overshadow the company's advertising revenue growth. Bloomberg's Kurt Wagner joins us with the details. It's a pretty familiar formula at this point. I'll hand it over to you. Give us the Meta earnings preview as best you can.
I feel like we've been talking about a lot of the same stuff for the past year, which is what is spending going to look like? And can the company paint this picture for investors that all the spending will ultimately pay off down the line? And you remember, it was just a year ago that Mark Zuckerberg was saying, hey, record spending up to $65 billion in capital expenditures, and everyone's head spun around, crazy to think of that. I saw the estimates on the Bloomberg today that they think capital expenditures could be $111 billion for Meta in 2026. And so it's just hard to quantify, easy to quantify, but hard to wrap your head around the jump we've seen in spending from this company in particular as they rush toward AI. And there's going to be a lot of questions about what the ROI on that is going forward.
And that is why the stock has taken some hits. I mean, initially it was talk up your capex and you're rewarded for it. But then in the last earnings, I'm just looking at the chart of how swiftly they fell back in October, as maybe we then started to be worried about the commitment of capital expenditure. How can they steady nerves in other parts of the business? What do we need to hear on the bread and butter of ad sales and the like?
Well, I imagine we'll hear them talk about how AI is improving ads today, right? And that's going to be in automated campaigns. That's going to be in better targeting. Pretty much anything they can do to show, hey, look, this $50 billion data center we're building in Louisiana is actually helping our revenue or will help our revenue immediately. I think that's going to be very important because a lot of their futuristic bets, we've talked about the metaverse on here, virtual reality, even the AI glasses, which seem to be going well. I mean, these are not driving meaningful revenue to the company, and yet they are sucking tons of cash to operate. And so that is the trade-off. A lot of the big bets still haven't materialized on the revenue side just yet. So they need to show that AI is continuing to help on that ads business.
Bloomberg's Kurt Wagner. He's going to be all over them post the bell today. Thank you. That does it for this meaty edition of Bloomberg Tech. So much more to come, Ed.
Yeah, the Mag 7 starts in earnest. Today is the day, and it's the market run-up going into it. Kind of got me on edge, Recap on the podcast. Kara's right, it was meaty. You know where to find it. On the Bloomberg platforms, online, Apple, Spotify, and iHeart. I know where I'll be at my desk after the market bell. I know what I'm bracing for. Question is, will you be back with us? This is Bloomberg Tech.